Gene, you're pretty comfortable, it sounds like, with what's going on in Nvidia's growth, even though it is slower than what we've seen in the past. Are you concerned, though, about where policy is going in regarding Nvidia's access to China?
The simple answer is not concerned about policy. I think that that's going to kind of right itself in the next few weeks. Within their January quarter, they're going to see a big return in their China business that's, of course, not factored into the street estimates. My concern around China is more structural long-term, is that the Wall Street Journal this morning is reporting that Alibaba now is coming out with a new inference chip. Of course, we've heard Chinese leadership cautioning not to buy some of the H20s after what have been perceived as some insulting comments from the White House in terms of the types and the caliber of chips that they're being allowed to buy. All this in the background of what is clearly the most important topic for nations is where their position is within AI. And so when I think about the China opportunity, I believe that it's a huge opportunity for NVIDIA over the next year, 2 years. But I think that it's going to be increasingly competitive with the likes of Huawei, with the likes of Alibaba. Interestingly, that new Alibaba chip is reportedly able to work with the CUDA, which is the essentially the operating system around NVIDIA's chips. That's kind of part of the fabric that holds that very intense tech economy together for NVIDIA. And so the simple answer is this, is that it's going to get a lot better for NVIDIA related to China. I think if you take the perspective of 5 years from now, China doesn't want to be held accountable to owning U.S. chips, and Chinese leadership is making big investments. So it's going to get more competitive there longer term. Doesn't change how I feel about the AI trade. If anything, it actually makes me more confident about it. But I think that's the kind of the scope and the trajectory around China.
When it comes to China and U.S. policy, the CFO had this to say regarding that 15% that the U.S. government says that NVIDIA has to give back to the government for the export license. I don't have to do this 15% until I see something that is a true regulatory document. So is it your understanding that basically the H20s can go to China right now and NVIDIA doesn't have to legally give the U.S. government the 15% the president said he had a handshake deal on?
It's my understanding that the licenses actually haven't been issued. Jensen made a comment about the timing of when those licenses are going to be issued. I think that separately, they still don't have clarity from the White House around the 15%. Why that matters for NVIDIA investors is it's still unclear about how that they're going to account for that 15% revenue share, and separately how they're going to think about potential price increases to offset that. And so that piece, as you are appropriately pointing out, kind of an important vector. And I think when you kind of put this whole mix together, I just want to take a step forward into what is going on with NVIDIA here. The stock is trading off after a very favorable quarter and what, in my estimation, was a better than expected guide. And I think part of that is related to some of the uncertainties that you talked about, timing of these licenses, timing of the revenue share. There's another piece that kind of vectors into this, which is NVIDIA's businesses, because China is getting a little bit smaller, is increasingly dominated by several companies. The top 2 account for just under 40% of revenue. I estimate the top 6 are 60%. And so there's this China and customer concentration that is a derivative of the China conversation. And so it gets quite complicated. And I just take the approach, at Deepwater, we take the approach of what's actually happening, what's the bigger picture, what's going on. And ultimately, we still think we are very early, second inning in AI. 3 months ago, I had said we're in the 3rd inning. And so I think we're actually earlier than what, as this is progressing. So really important to understand what's going on with these licenses and how the U.S. government, but ultimately the bigger picture is what's happening with AI demand over the long haul.
Well, and what's happening with return on investment here, Gene, because we're looking at trillions of dollars spent to build up this infrastructure. You are one of the most famous tech analysts out there, and you've been through it all, right? You were there for the dot-com bubble burst when everybody was spending way more than they needed to, laying fiber for the money that they made in the years following. Are we seeing something similar play out now?
I think the big difference, first of all, is this return on investment question is valid because just the massive amount that's being spent. The best example of this, of course, is what's happened with Meta's business, is that this is a business that was growing kind of in the mid-teens. They pushed more for better targeting with AI, and now you're having a business that's consistently growing in the basically 20% range, their advertising business. I mean, remarkable at scale how AI is impacting Meta. So from my perspective, is just that one piece alone, I think, is a good evidence. One is I think back about what happened 25 years ago. There was a piece that we knew that the internet was going to be something big. There's a lot of commonalities. I think that when it comes to what's going on with AI right now, I think that you do have examples of what's going on with Meta about real, tens of billions of dollars of incremental revenue because of this, which we didn't see back in .com. I do want to just add one connection point to what happened 25 years ago and where we're at today too. Is there's this kind of ongoing conversation about the bubble. Where are we at? Are we in a bubble? We're not in a bubble. Looking back 25 years ago, and ultimately we're not in a bubble. We will get to a bubble. I think that the market still has a couple more years to run here, and it's going to be a big bursting of the bubble at that point.
Following a lackluster response from investors to Nvidia's high-profile earnings report on Wednesday, 2News sent the industry on course for a lost week, causing Nvidia and other U.S. chip stocks to plummet on Friday. On Friday, Nvidia's stock fell almost 3%, and it lost roughly 2% for the week. Following a third-quarter profit prediction below Wall Street's projections from server maker Dell, a client of those chip makers, and a recent report claiming that Chinese internet giant Alibaba is testing a new chip to compete with Nvidia and AMD in China, Friday's decline occurred. Alibaba is exploring a new processor for AI inferencing, according to the Wall Street Journal, and several prominent Chinese corporations are creating alternatives to Nvidia's H20 China chip. According to a report released by Nvidia on Wednesday, the company did not sell any H20 chips to China during the most recent quarter and is still awaiting confirmation on new regulations that would require it to give 15% of the revenues from those sales to the U.S. government. According to LSEG estimates published by CNBC, Dell reported third-quarter earnings per share of $2.45 late Thursday, below the $2.55 anticipated. Over 2% of Nvidia's yearly sales is attributed to Dell, according to estimates from Bloomberg. According to Bloomberg data, the server manufacturer also contributes about 1% of the revenue of Broadcom, 3.6% of Advanced Micro Devices, and 3.7% of Micron. Both AMD's and Broadcom's stocks fell more than 3% on Friday. The PHLX Semiconductor Index declined over 1% for the week and almost 3% on Friday. The actions come after Nvidia's earnings report on Wednesday, which revealed that its data center business did not meet Wall Street's expectations in the most recent quarter, and that geopolitical uncertainty still cast doubt on the company's prospects in China. Concerns regarding the highly concentrated AI business were also raised by Nvidia's growing dependence on a limited number of clients. Nvidia shares dropped about 1% on Thursday, despite gains by other chip stocks as the Nasdaq approached a new high. Since Trump and the chipmaker negotiated an agreement for Nvidia to provide the U.S. government 15% of its profits from China chip sales in exchange for export licenses, China has put pressure on local businesses not to use the company's AI processors. After an unexpected ban in April, Nvidia has been given permission to export part of its H20 chips to China, albeit that revenue-sharing arrangement is still pending. In an interview with Yahoo Finance on Wednesday and on the company's results call, CEO Jensen Huang emphasized the significance of the Chinese AI sector, which he views as a quickly expanding $50 billion market opportunity. Alibaba's development was probably a move hedging its bets in case of more geopolitical obstacles that prevent Nvidia from exporting its H20 chips to China, or its planned lower-power Blackwell chips for the nation, analysts from Hedgeye Risk Management told clients on Friday. The new chip from Alibaba would alleviate some of the pressure on the company's capacity to obtain Nvidia's processors for itself, but it wouldn't necessarily force Nvidia or AMD out of the market, according to analysts who stated that the chip supply in China is worse than it is shown. Investors and chip manufacturers are waiting for the Trump administration to provide additional details regarding its intentions to impose 100% tariffs on semiconductors. the president's attempt to fire a senior Federal Reserve member was, in some ways, not the week's most significant news for markets. Rather, it was Nvidia's earnings announcement, a quarterly occurrence that has gained Super Bowl-level fervor in the financial industry. It's easy to understand why everyone is so excited. 2 years ago, if you had invested $1,000 in Nvidia shares, you would today be sitting on a $3,000 profit. This year, the stock has increased 30%, while the S&P 500 has gained 10%. Additionally, Nvidia consistently outperforms Wall Street's consensus projection. What's not to adore? At least to some investors, the Nvidia market is beginning to appear extremely frothy. And not just because Nvidia's customer's CEO, Sam Altman, has openly conjectured that artificial intelligence is a fad. People are starting to worry about the Nvidia story for the following reasons. First of all, Nvidia is really big. Not simply, though, oh, it's a big company. In terms of market valuation, it surpasses all previous public companies. We frequently discuss its $4 trillion market capitalization as though it made sense. Think about how, before Apple hit the $1 trillion mark in 2018, the world had never witnessed a $1 trillion public business. We currently have around a dozen, practically all of them are in the tech industry in the United States. Because of its scale, Nvidia alone accounts for 8% of the S&P 500, reason number 1A. Therefore, you should keep an eye on Nvidia's results, even if you don't own any shares, because they have the power to completely change the market. Zoom out even more. According to Deutsche Bank, Nvidia's market capitalization represents 3.6% of the world's GDP. Indeed. One business is so big that only 3 clients account for half of its total revenue. Reason number 2. Nvidia is typically included when discussing the AI sector. Nvidia chips power ChatGPT if you utilize it. The same is true of Anthropic's Claude, Google's Gemini, and Amazon's, whatever the name of Amazon's chatbots. All of those products are driven by processors manufactured by this business, which until a few years ago was merely a tech workhorse producing processors that make video games look better. If you had invested $10,000 in Nvidia stock 10 years ago, you would now have this amount. Nvidia is regarded by many investors as the greatest artificial intelligence pick-and-shovel play. The business recently released impressive second-quarter results. 10 years ago, those who placed bets on Nvidia saw phenomenal profits. Nvidia is the biggest firm in the world with a market valuation of around $4.5 trillion, and it has produced significant profits for its investors. The business, which is thought to be the ultimate pick-and-shovel game driving the artificial intelligence wave, produces semiconductor chips that are perfect for AI because they can process numerous jobs at once. Nvidia has revealed another wave of impressive fiscal 2026 second-quarter profits. The revenue of $46.74 billion and adjusted earnings per share of $1.05 both exceeded the Wall Street forecast. Although management stated that the company is still witnessing high demand for AI infrastructure, investors appeared upset that the data center division's revenue projections were somewhat missing. When it comes to stock market investment, it's all about placing bets on your future vision. Back in 2015, very few people were able to predict how Nvidia and its graphics processing units will challenge artificial intelligence. However, those who were optimistic about the company's chances in the gaming or automobile sectors have profited greatly. The stock has increased by over 33,280% in just 10 years, so if you bought $10,000 at that time, you would now be a multimillionaire. As you can see, Nvidia's stock has been rising steadily since 2023. Take into account that your $10,000 would have been worth roughly $3,400 10 years ago if you had invested in the benchmark S&P 500 index. Even if the overall market saw a very robust recovery, the performance of the chip giant still outperformed it. As of this video, Nvidia is trading at about 41 times anticipated earnings. Whether the business is overpriced is clearly up for dispute, particularly if the AI surge finally slows down. However, investors are willing to pay the premium because there are many firms in the market that sell at much higher multiples with less growth. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Would love your take, Paul. On this earnings print, stock is down about 3% here in the after hours. What stood out to you, Paul, about that report?
Yeah, great question. Look, I think there's this uncertainty about China is sort of gnawing at investors in terms of outlook here, because I think as we know, Nvidia didn't include any sales, of course, of H20s. I think that was expected given the quarter. But looking ahead, I think it's a little surprising that there's no revenue projected for H20s or this notional B30 based on the Blackwell architecture that's being designed explicitly for China. So it really highlights that Nvidia is really caught in the middle of this U.S.-China technology competition, if you will. And it's pretty amazing that U.S. policy can have such a huge impact on Nvidia's earnings here. We're talking about, I think the estimate was $4.8 billion or $5 billion worth of lost revenue from the H20. And then, there's Nvidia sitting on something like 700,000 H20s in the stockpile, hoping to sell those to China. And then they also paused potentially building more H20s at TSMC in Taiwan because of the uncertainty they're facing in China. Because the Chinese government, of course, is looking at the H20 and is also not happy about things like the U.S. government talking about tracking GPUs. And so they've issued guidance to some of their companies to reconsider using the H20 and looking at domestic alternatives here. So Nvidia is really in a tough position here where the Chinese companies, I was in China last month, I talked to all the Chinese AI companies, they all want to buy the H20, for example, for inference, because it turns out to be really good for inference. But now they're up against the Chinese government desire for them to look at alternatives from companies like Huawei and others in China. So Nvidia has a much more complicated equation here as they look to the China market and look to figure out how they maintain a foothold there in this key space of AI, particularly AI inference, where the H20s and presumably these B30s would be highly useful to Chinese companies. So I'm just stunned in some degree by the huge impact that the U.S. restrictions have had on Nvidia's bottom line here.
Do you think, Paul, if I'm in this name, if I'm an investor, bottom line, I want to know what is my long-term opportunity over in China? How much money can CEO Jensen Huang ultimately make over there? Do you think we can really know that right now with any great degree of clarity and confidence, given all the headlines and dynamics and cross currents you're highlighting, Paul?
No, I think we really can't, because there's a couple of big things. One I didn't really mention either. So in addition to sort of where the Chinese government is going to come down on this, is it going to mandate, for example, that companies not use Western GPUs like from Nvidia and AMD? It's tricky because Chinese companies, as I said, want to use them. So there'll be some back and forth on this within China in terms of the H20s. Now, it's complicated also because the H20 is now viewed as somewhat outdated, and companies in China may be wanting to wait, for example, for the B30s that are based on the new Blackwell architecture. So there's sort of that technology component to this also. But over the long term, the hard thing to determine is when Chinese companies, in particular here Huawei, are going to be able to crank out, to produce at scale and volume some reasonable alternative to Nvidia's GPUs here, and that's hard to pin down. Right now, for example, SMIC, which is the domestic foundry, can produce a fairly small number. Let's say 200,000 GPUs for Huawei, the Ascend series of GPUs. But Chinese developers don't really like this chip yet because there's still not a software environment around this. Of course, we know Nvidia has the CUDA architecture, and developers are used to using Nvidia hardware and software. And so, but the government is working really hard to push domestic companies into the domestic alternative ecosystem, and that's Huawei. That's also a number of smaller GPU developers like MetaX and BREN, which have pretty good offerings, but they're also reliant on SMIC to manufacture their designs. So over the next year, I think we're going to see the emergence in China of better capabilities in advanced manufacturing. But it's hard to say how good this will be and how willing those developers in China will be to move away from the Nvidia ecosystem, which they've known for the last 10 years, 10 or so years. And it's hard to know when the Huawei alternative in particular will be good enough that developers will say, okay, we can switch over to this. Huawei's working overtime to make this easy. It's working with companies like DeepSeek and Alibaba to try to improve its offerings, but it's hard to say exactly when this happens. But in general, then I would think over time, Nvidia in this game, if the U.S. is going to continue to impose these controls on their GPUs, is probably looking at a pretty diminished market share in China if we look a little bit farther out, 2 to 3 years.
Paul, I only have 30 seconds, but I want to get this one in there. There are some, Paul, who do argue the U.S. government shouldn't be permitting Nvidia or AMD to sell AI chips to China because they say it's a national security risk. Quickly, Paul, 30 seconds. What's your response?
Well, look, I think that's a complicated question because I think that hinges on what you think AI will be used for in the future. The U.S. position is that it's going to be decisive in some military applications. I don't really accept that. I think the AI and China viewed AI as a very much a civilian technology, and most of the benefits are going to be in the civilian sector. Like any technology, of course, AI will be able to be used for military purposes. But really, it's not really even a dual-use technology. It's really a civilian use technology, and it's going to be so important that I think that focusing only on the potential national security risks of AI, I think, is going to be really detrimental, in particular to U.S.-China relations and to things like progress on AI safety. And then, of course, Taiwan is another potential political risk because, again, all these GPUs that we're talking about from Nvidia that we talked about today, nobody mentioned Taiwan, right? They're all manufactured in Taiwan, virtually all of them, right, or packaged in Taiwan. And Taiwan, of course, is a major geopolitical flashpoint here. So there's a lot of risks around treating AI as a race or a competition with China. And so I'm a little bit concerned that the risks could end up outweighing any gains that are perceived by controlling this technology, which is really a general use technology.